And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, turning intent into execution. That's how ABSA are invested in Africa's energy future. 8 minutes after 6. Good evening. Welcome to the program. I'm Stephen Grootes. I was astonished to see on SENS this morning the story around Spar, the fact that the chair, Mike Bosman, and the deputy chair, Shirley Zinn, have resigned. I mean, the Bosman era at Spar has been such a difficult one for the group in so many ways, and some might say I've been quite polite when I use the word difficult. He actually had to step in and run the show for a while, if you remember. He says, and Shirley Zinn say, they've told News 24 Business that they actually felt threatened by some of the comments that were made by franchise holders, and there's been a lot of anger and frustration. I mean, is this where we are in business, even kind of what I'd call corporate business in South Africa? Have you ever been in a situation where someone has threatened you? And I suppose threats can go in lots of directions. I mean, if someone says, I will take my business elsewhere, or I'll never come into this shop again, is that a threat? Or is it something more serious that you define as a threat? I'm sure you have a story or two, you know, your sort of worst experience in business where something like that has happened. But certainly for Bosman and Zinn, they feel they've got better things to do with their lives. If I've been threatened, well, maybe I might feel the same. I'm not sure. I don't know enough about the situation. But your story, please, if you've got one, on 072-702-1702. What happened to you? And how did you deal with it? So many people have stories, you know. Sometimes it's around a boss. Sometimes it's actually around someone who's supposedly in the hierarchy below them. And sometimes it's actually something very serious from a competitor or something else. But, you know, have you ever seen someone making a threat? How did they deal with it? What did you do? I think there's so much that's going on here. It's an astonishing story. We'll speak to the finance ghost, you know, the retail analyst, in just a moment about all of that. I was amazed at the story in Business Day today, and well done to them for getting it, about the Reserve Bank investigating a company called Khabelo. Essentially, they say that it's managed to move 4 billion rand offshore using other people's allowances. Now that, to my mind, from my limited knowledge of this, must be illegal. I think that would be pretty clear. But what gives the story a bit more juice or spice or tea, whatever you want to call it, is that the person in charge of finances for the DA, Mark Burke, is the chair of this company. The person who runs the company is his brother Nicholas Burke. I didn't realize that Mark Burke actually has a doctorate in econometrics from Cambridge, so clearly knows what he's doing with money. But very interesting story. The DA having to sort of deny it has anything to do with them. They say he's not involved in the company anymore, although as EWN reported, still seems to be on the website. We'll speak to Khabelo Khumalo about that, the deputy editor at Business Day, who broke that story this morning. I think that's a really important story. I'll be very keen to hear from Mark Burke. If you are keen to talk, 011-883-0702, 0214460567. Very happy to hear your side of the story. The president talking today about regional integration and shared industrialization. And he's talking about SADC. He's talking about the countries in our area. And how many times have I made the point that our big problems are problems we share? So youth unemployment, unemployment generally, deindustrialization, Zimbabwe, Namibia, Mozambique, Botswana, all facing the same problem. So interesting to have the SADC summit here in Durban, to have the president talking about that. What I can't quite get is there's supposed to be a protocol on the free movement of people. And what that means is that all the countries that belong to it, if you're a citizen of one of those countries, you'd have visa-free access for 90 days. So if you're from South Africa, you can go into Mozambique for 90 days, which you can already, I think. But only if all of these countries sign the protocol. Normally, it's the big economy. You know, think of the US or think of Britain or Germany in the EU. But here, we're the ones who've signed it, and other countries haven't signed it. I'll ask Victor Khumaswana a bit about that in about half an hour. And over-the-counter derivatives, big changes coming there. Andre Saliers is the currency risk specialist and director at Treasury One. And then I'm pleased to tell you, just to confirm with you, that Adrian Gore, the founder of Discovery, he'll actually be in the Money Show studio to help talk about his book, The 4 Pillars. It's about leadership. And I know there are many books about leadership, but very few of them come from someone with the experience and, frankly, the sheer thoughtfulness of an Adrian Gore. I'm really looking forward to that conversation. Mandy Wiener's doing his book launch on Wednesday night, by the way. Do some Googling. You might still be able to get a ticket. I'm not sure. But Mandy Wiener, the Money Show's Mandy Wiener. Money Show. The Midday Reports show, The Midday Reports, Mandy Wiener is doing the Adrian Gore book launch on Wednesday. We'll speak to him this evening in around an hour or so's time. You're with The Money Show. It's just gone 12 minutes after 6. Good evening.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Astonishing developments in the difficult story that is this period in the Spar Group's history. The resignations of both the chair, Mike Bosman, and the deputy chair, Shirley Zinn. The Sen statement saying they had separately decided to step down after a very difficult period for the group. Lost hundreds of millions of rand in an IT upgrade, overspent on Black Friday promotions. Also a period in which the CEO changed several times. It's been losing market share. This afternoon, News 24 Business reporting Bosman and Zinn have sent them a statement in which they say they resigned because of sustained personal attacks by Spar franchises and workers. There's a retail analyst, you know him, he's known in public as the Finance Ghost, and he joins us now. Finance Ghost, good evening. Look, I'm not in a position to know what's going on behind the scenes in the group with the franchise holders and all of that. But the recent history of Spar while Bosman has been chair has been so difficult. How do you think this time is going to be remembered?
Not well. I think this time will be remembered. And by the way, good evening, Stephen and everyone listening. Sorry, just laughing at the thought of how it might be remembered is just poorly. Spar is down 54% year to date. It's down 78% over 5 years. I had a look at the market cap earlier, 8.3 billion rand. So just to, give some context to that, Pick n Pay is 14.5 billion. That's, a fair bit more. Woolworths is like 5 times more valuable than Spar now. And Pepcor's little fintech arm, which is kind of an offshoot of Pepcor, has been valued at over 21 billion rand. And you've got Spar sitting at 8 billion rand. So in short, it's not going to be remembered as a very happy time.
Presumably, it wasn't just because of Bosman, or it certainly wasn't just because of Zinn. I mean, there would have been a series of decisions made by the board, by the people running the show at the time, and big mistakes that were made as well.
Yeah, look, it's been own goal after own goal, unfortunately. So there's a lot of stuff at Spar that serves as a cautionary tale. The classic going offshore, doing deals where they really shouldn't be doing them, trying to build an empire internationally. That's been a huge headache. Spar's had to basically run away with their tail between their legs from Eastern Europe, from Switzerland. They've hung on to very little of their international stuff. And unfortunately, it's all happened at the same time that the South African grocery market has changed spectacularly. So this is just a tale of disruption at the end of the day, but it's also a tale of a structural issue, which is that the franchise model is really under the microscope at the moment. Can it actually work? They call it the independent retailer model. That's their preferred way of describing it. But essentially, they don't have control over the user experience as a customer. But more than that, they don't have control over what's happening in the stores, who the stores are buying from, the data. And that makes it really, really, really hard to compete with the likes of Checkers with 60/60 or Woolworths with Dash, where there are no franchisees involved. It's corporate stores. Everything rolls up into the same reporting system. They know what's in all of the stores. The data is there. They've got data analytics teams. It's very hard to compete with that these days.
So, I mean, even with franchises sort of changing the terms of the franchise model and saying you have to give us all of this data, surely all of that could be managed. The problem now is that the moat of ShopRite, the moat of Woolworths, they've become incredibly deep and difficult to get through. I mean, they've managed to find ways that will make it very hard to compete with both of them.
Yeah, look, and it's easier said than done, hey, on the data. I mean, it really is. I've spoken to enough experts in the world of omnichannel to know that for a corporate to be ready to do what Checkers has done, what the Fashini Group has done with Dash, actually takes a huge commitment to getting the data correct internally. It's why I'm still bullish on a company like We Buy Cars, for example, which everyone thinks I'm crazy at the moment. But wait until those Chinese cars start actually hitting their showrooms and they've got all the data, everything built, they're ready to go. It takes time to build out those systems and everything else. So it's not that easy for Spar to try and get it right. They've tried with Spar 2U. I think to this day, I've still never seen one of their vehicles on the road. And I have a Spar that's pretty near my house and it's a good one. So if that Spar is not really getting these orders, then which ones actually are? And that's why Spar is just falling further and further behind. Their results to March were not good. And just other areas where they seem to be losing ground. So in these latest ShopRite numbers for the 52 weeks to the 28th of June, One of the things that really stood out to me was the double-digit growth in liquor shop. Double digits. Now, I'm not sure that South Africans are suddenly drinking 10% more than they used to. So that is probably market share gain. Where is that market share being gained from? Well, I would guess that Tops is probably under strain at the moment, because in Spar's last set of numbers for the 26 weeks to the 27th of March, their liquor business only managed 2%. As I say, ShopRite, yes, it's a different period. That was ShopRite's full year, but double digits in liquor shop. And that just shows you. That shows you what happens when you've got leases in the right place, when you can send it on a little turquoise scooter. And that's the problem. It's really hard to fight that.
Also, booze is very price sensitive. And ShopRite, surely, particularly at a time of low inflation, puts heavy pressure on prices, both in booze and in food.
Absolutely. Grocery is one of the hardest games in the world. I always use the analogy, it's like being squeezed by a python. You know, the big ShopRite is the python, clearly, and it's just squeezing all the time on all of its suppliers, on all of its competitors. They can just eke out these incremental gains. Checkers gave Woolworths a huge fright. Woolworths had to really sit back and think about their business and where they will be more price competitive versus focusing on differentiation, where they've had to really get Woolworths Dash correct. And you've obviously got Pick n Pay as well, who in their latest numbers, there were actually some indications of growth there. And interestingly, at Pick n Pay, actually the franchise business is also underperforming the corporate owned stores. And it's been that way for a couple of years now, which also makes me wonder to what extent franchisees can actually really compete in this market, because at Spar, it's not going well. At Pick n Pay, they are underperforming the corporate-owned stores. And at ShopRite, actually, in the latest numbers, we saw OK Franchise, which is the only franchise business left in ShopRite, had a huge decrease in the number of stores. It looked like a franchise agreement got cancelled, which significantly reduced the number of OKs. So franchise is a tough gig. And unfortunately, it is Spar's entire gig. And that's the problem.
So, I mean, that means no matter who becomes the new chair, no matter what kind of leadership team you get going there, the CEO is, of course, still there. This would require a strategy change, and the franchisees are not going to allow that, surely. They would have a huge amount of money in the game. That's why they've been so cross.
That is why they're so cross. So I was listening to you introing the segment, and, you know, yes, the word threat can mean lots of different things, and it's never justified, but I do also have some sympathy for someone who's invested their life savings in a store, and then because of a decision made at corporate to do a new systems change, they suddenly can't get stock and they can't compete, and they are watching their money disappear while executives are still getting paid a fortune, and there's never any clawback of what they earn. So obviously that leads to tension, and sometimes that tension boils over in a way that's not nice and not acceptable, and there's never an excuse for it. But I can also understand the human behind it. And it's tough. No, you can't just change the chairman and fix the problem. That's not the way this is going to work. They obviously need to first just stop with their own goals, which I think has happened for what it's worth. I think they've acknowledged all of the mistakes that have been made. Now it's about how they actually get back on the wagon and get things right and get franchisees back on sides. A good Spar is still a good business. I do believe that. I've shopped at Spar for enough years. I think we all have. If you've got a local Spar at your local center, it's got a great deli normally, they understand their local little community, it can still do well. But they're just constantly up against the machine that is ShopRite, Woolworths, and Pick n Pay on the recovery trail here, fighting them with scooters and delivery and convenience. And until Spar can solve that, then I'm not sure that they can turn it around.
Finance Ghost, the retail analyst. Thank you. Really appreciate your time on The Money Show. 21 after 6.
The Money Show with Stephen Grootes
On 702.
702.
Business Day reporting today, the DA's federal finance chair, Mark Burke's business, has been accused by the Reserve Bank of using other people's allowances to move, 4 billion rand offshore through a company called Khabelo. Mark Burke is the chair of the company. It's run by his brother Nicholas Burke. The claim is that the company was using the single discretionary allowance and the foreign investment allowance of their clients to move money out of the country. Khabelo Khumalo is the deputy editor at Business Day. Khabelo, good evening. What is the claim that the Reserve Bank is making here? What do they say Khabelo has actually been doing?
In essence, they're saying Khabelo has been using people's single discretionary allowances and foreign investment allowances for its own benefit, which is not permissible by law. Essentially, they are accusing Khabelo of even hiding this fact from their clients who will invest money with them and they use it to invest offshore using the allowances that I've mentioned for their own benefit, really, and not ultimately to the benefit of its consumers or clients, which anyway will be impossible by law to use third parties, SDAs, to benefit your own operation.
Is it clear whose money this is? This sort of 4 billion rand, who it belongs to?
They have grown to quite about a sizable client base of just under 900 people. So if you do the math, because in terms of the foreign investment allowances, they had clocked up about 8.9 billion in those, and another 891 million odd in single discretionary allowance. It means they had quite a wealthy clientele, which will invest average they will max out their limits in terms of foreign investment allowance, which is 10 million. And single discretionary allowance, which at the time last year was 1 million. It was recently hiked to 2 million in this year's budget. So if the math says each of their clients at least will invest about 11 million both in their single discretionary allowance, which had a maximum of 1 million, and foreign investment allowance, which has a maximum of 10 million that any other South African who's tax compliant can move overseas and invest in whatever they want to invest in.
So I'm sure the people at Khabelo, Mark Burke and Nicholas Burke, would have known the law. They would have legal advice. They say this is about the practice of crypto arbitrage changing. I'm not even sure I know what that is. But no matter what you use it for, you can't use someone else's allowance, can you? Full stop, finish and clear.
That's what the law and the law says, at least or demands. That's why the investigation, as much as it is ongoing, but this affidavit launched by one of the investigators, a man who has about 35 years experience really in exchange control environment, says anyway, Khabelo would have hidden their business model, or at least the intent of their business model, from the authorities until whistleblowers came to the fore, letting the Reserve Bank off of the real business model. They are defending their business model, but one of the accounts, at least that they had with Access Bank, has been frozen. So that's quite a big step for the Reserve Bank to freeze or block anybody's funds, because funds are like property. You don't just deprive people of their property willy-nilly. It means the Reserve Bank will have satisfied itself that at least there's a prima facie evidence that their business model, like they say in their own affidavit, that was nothing more than to circumvent the exchange, South Africa's exchange controls for the ultimate benefit of Khabelo.
So there's a lot of money here. If it was proved by the Reserve Bank, what happens to the money? Does it stay frozen? Could there even be some kind of criminal punishment?
I'm yet to come across a case where there's criminal punishment for breaking exchange control rules. There might very well be. Maybe I'm not just aware. But just talks about ethical way of doing business, at least for me. That if these allegations by the Reserve Bank, which has more information than anyone else in terms of money movements in this country, says you designed your business model precisely to circumvent the country's laws. It talks about ethical way of doing business. And one other thing that development in the story is that anyway, Khabelo has gone to court twice already. Firstly on an agent basis, which they lost, and on the normal one, where they also failed to have the blockage of the funds by the Reserve Bank set aside. That tells you that at least even from the courts, there is a case for Khabelo to answer in terms of its business model, and their mere denial of their business, of their at least defense of their business model might not amount to anything if they can't prove that even to the judges who have listened to both the agent application and the main application. As it stands, their funds held with Access Bank are frozen, and they've stopped anyway conducting at least that part of this crypto arbitrage business trading that they have. So the question is, if you defend your business, why stop that? Why not fight it until the end? But they've also stopped at least that part of their business, which tells a story on its own.
Khabelo, thanks so much. Khabelo Khumalo, Deputy Editor at Business Day. An amazing story. 28 minutes after 6.
The Money Show.
The markets.
Tana Mongwes, Portfolio Manager at the Old Mutual Investment Group. Tana, good evening. Spar, clearly important developments and things going on in the background there with the resignation of the chair and the deputy chair.
Good evening, Stephen, and good evening to your listeners. Spar, I mean, it was a bit of a surprise, the trading, the update this morning around the resignation around the deputy chair and the chairman, especially because it felt like they were a stabilizing force over the past few years, given that Spar has had previous governance issues. But I think it also just speaks to just the pressure from the franchisees, from shareholders and all other stakeholders invested in Spar. And I think, the pressure just got to the chairman and the deputy chair.
Tungela, I mean, they had very, very strong results. Higher coal prices helping that, and their share price rallied very strongly as a result.
Yeah, up 10% for the day. And I mean, this is, you look at the Middle East war, high gas prices, the whole, secular trends around energy security, and you see it reflected in the thermal coal prices. So yes, very good result. But I mean, you are seeing improving Transnet coming through in that result. So higher volumes exported into a higher coal price environment. But you're also seeing, like they acquired the Australian business Ensham a few years ago, and that's starting to ramp up, and those volumes are coming through. And I think that was the highlight of the entire result, just the lower unit cost, especially in this environment we're in, high cost push inflation, especially from diesel, strong. But they still managed to deliver a really good result and a very good dividend. So, I mean, the share performance speaks for itself.
And then RCL Foods, I mean, they've had quite a few problems. Their sugar business had lower profits because of strong sugar imports that we've seen. Their pet food business, 20% down in volumes. They've had a food safety issue there. They've had one or two other problems as well.
Yeah, I mean, their trading update, we're expecting, earnings per share to be down by like 50% when they report their full year results. It's been one thing after the next. Like you've rightly mentioned, the sugar and the pet food incident probably was the big thing. But they also had an impairment in a goodwill impairment in their Sunshine business. It just seems to be one thing after the next, and it's really impacting their results. It will have really impacted their results this year.
Tana, thanks very much indeed. Tana Mongwe is the portfolio manager at the Old Mutual Investment Group. Time for you're with the Money Show. It's just gone 6:30.
WhatsApp Stephen
on 072
702
1702.
22 minutes now to 7 the time. I've been watching the whole argument about the unbundling of Eskom and the creation of a truly independent energy trading company, or grid operator, really. I should call it the international transmission system operator, and all of that with such great interest. Everything's at play here. Electricity, which is the big success story under Mteto Nyati and Dan Marakane over the last couple of years. They are obviously under pressure. The president's saying this unbundling will happen. They're saying it's got to be done carefully, and it just seems to go on and on and on. And Busisiwe Mavuso really putting even more pressure on this. And, she wants the unbundling to happen more quickly. She has a weekly newsletter. She says that they are resistors to reform. I thought that was interesting. And she's clearly putting someone like Mteto Nyati on that side of the argument. I imagine he was probably first not surprised, but pretty angry to read that. I can't imagine someone like Mteto Nyati wanting to block reform for the sake of it. I mean, surely what he wants is for things to happen properly. And he's said his piece over the last couple of days, and there's been various things that have gone on about it. It still seems to me that I get it's technical, I get it's difficult and complex, and there are lots of constituencies, and some of them are lenders who've lent Eskom billions of rand. But there's still got to be a way to have peace in this. Surely we can come to some kind of agreement. Though the thing we must avoid, that we absolutely must avoid, is that after all of the progress we've seen at Eskom with the people who are currently running it, we do not want them to be forced into a position in which they feel they must resign, or if they are forced. We really do not need that. So please, can we try and avoid that? Can we get some wise heads in a room or on a WhatsApp group or something and just, make sure that that doesn't happen, because that, I think, would be a travesty. It would be a terrible thing for some of the people involved in literally saving Eskom and along with it the country to now, because of the way they feel about things, feel they have no choice but to go. That would be a travesty, and we must make sure that we avoid that. 20 minutes to 7.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Just going to 7:15. Don't forget Adrian Gore about half an hour from now on his new book, The Four Pillars, in the Money Show studio. The President, Cyril Ramaphosa, using some of his public appearances around the Southern African Development Community Summit in Durban to push other members of SADC to sign the protocol on the free movement of people. It means that people can go into other SADC countries visa-free for 90 days. We've already signed it. Several other SADC members haven't. And at the same time, the president's saying he'll use his chairing of SADC to advance inclusive industrialization. Victor Khumalo follows events on our continent incredibly closely. His latest book is Africa Bounces Back. He's also marketing and communication executive director at the University of Limpopo. Victor, hi, good to chat again. I mean, the SADC bloc has been around since, in its current form, 1992. And yet still, there doesn't seem to be real free movement of people. Why do you think it's taking so many other countries to agree to it? What are they worried about?
Good evening, Stephen. It depends on what really, when they say who the cap fits must wear it, the smaller countries in SADC, if I can just stick to SADC, because it's still the largest region, the regional economic bloc in Africa by GDP, over $800 billion. The second largest being ECOWAS, 600 billion. But trade volume is still the ECOWAS region. But South Africa is the one that stands to benefit the most from these economies. And I'll tell you why. Our economy is not growing. We have a lot of informal business and trade and movement of people in and out of South Africa that we are not able to take advantage of from a revenue point of view. Remember, if people walk in illegally and they don't register, you can't really tax them, you can't benefit from them. So the economy of South Africa there are more companies that need to grow into the rest of SADC, 16 member states, versus if, say, you are from Lesotho. If you're in Lesotho and you're running a successful business, you don't really have much of a headache because your economy can almost take care of itself. But South Africa, with the slow growth, with the inability to take advantage of the movement that's already taking place from the SADC countries, I think stands to benefit the most. And that's why you will hear President Ramaphosa more than the other SADC presidents talking about it more.
I mean, if you look at our problems, so we talk about unemployment all the time, as we should, youth unemployment in particular, deindustrialization. I mean, these are problems we share with the entire region. Mozambique, Botswana, Namibia, Zimbabwe, all have exactly the same problems. And the idea of a shared industrialization, we would all want that to work. But frankly, is it possible?
Yeah.
I mean, you have China, which is just such a juggernaut, and I don't know if anyone can compete with them.
No, China, you cannot compete with China if you are going to them, Stephen, as an individual member state. And that's why Africa needs the integration. Because when you are 16 states in SADC, you can negotiate better with China. Because suddenly you're saying, hey, I have 300 million people here. Although we are not a billion plus like you, we are a sizable community. But if you are not aligned and if you are not coordinated, they are going to go into Lesotho, cut a deal, go into South Africa, cut his own deal. And then they'll almost divide and rule the region. And that's why the integration is important. But Stephen, your point about we share all these unemployment problems with the rest of the continent, but we still have the net inflow, the net influx of immigrants, which tells you something, that people in other SADC countries look at their problems and think, South Africa is having it easy. I can go out there and make a living and generate income and send money back home. And that's why we need the integration. Although we suffer from the same problems, those economies are a lot more informal, and therefore people can take care of themselves. Even if they might look to us like they are poor. And that's why when they come into South Africa, they see so many opportunities and they are able to build businesses here in areas where South Africans have just been looking on and not doing much. So that's why the integration information is so important because China is taking advantage of the division and is exploiting those divisions and the fact that they are able to cut it. A smaller country with Lesotho can negotiate. A smaller country, even South Africa, is not as big as we think it is. So we are not able to negotiate unless we are integrated.
I mean, is part of our problem from the way you're talking, is it the fact that we don't take informalization seriously enough? I mean, we tend to underestimate the informal economy.
We do, and we are losing out because you can look for any researcher, any economics researcher will tell you the bulk of the world economy is generated and driven by small and medium enterprises. We can debate as to how small is small, but informal. So let me give you an example. If you and I went tomorrow and opened a restaurant, Stephen, we're going to hire, say, 5 people to run the restaurant. But if a restaurant chain or a multinational company opens a branch, they are likely to say, okay, Stephen, you're already running Sandton. Why don't you run Morningside as well? Why don't you run Four Ways while you're at it? Whereas if you and I open another branch, we need other people. That's the advantage of having small businesses. And because we don't take them seriously, we don't roll out the red carpet, as the late Clem Santa used to say. We roll out red tape. We don't allow them to grow, and we don't think they can really drive the economy. When the president says, I'm meeting business leaders, they are looking at JSE listed companies. Big mistake, because the jobs that are being created are not focused there. Those companies, when they run their efficiency ratios, will cut down jobs. Smaller businesses will always hire more people.
Victor Khomaswana, thanks so much. Really appreciate it. Follows events and our content very closely. Author of the book, Africa Bounces Back, and a marketing communication executive director at the University of Limpopo.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, turning intent into execution. That's how Absa are invested in Africa's energy future.
7 minutes to 7. Bloomberg reporting this morning the Reserve Bank preparing to finalize new rules that would mean over-the-counter derivatives would be cleared through a central process by 2028. Over-the-counter derivatives are normally a private financial contract negotiated directly between two people. Its value depends partly on an underlying asset like a currency or a commodity. Andrea Cilliers is the currency risk specialist and director at Treasury One. Andrea, good evening. I'm going to ask you to start at the beginning on this one because most of us have never done something like this and played with over-the-counter derivatives. What is an over-the-counter derivative? What is it used for in the ordinary course of business?
An over-the-counter derivative, the simplest way I can tell you or explain to the listeners what it is if we sit around a table, I'm sitting on the one side, you're sitting on the other side, and we negotiate over the counter a derivative instrument whereby I say to you that I've got a loan, and on this loan I'm paying an interest rate of prime minus 1%. But I do think that interest rates are going to go up over the next couple of years, and I would like to fix my interest rate rather than playing what we speak about, a floating interest rate. Floating, in other words, subject to change of the underlying. And then we agree that I will swap my floating rate to pay a fixed rate. And we will exchange no nominals, we will only exchange the interest payments either due by me or due by you to me, depending on which rate on the date of the fixing is higher. And we can do that with interest rates, and we can do that with currencies. So we could agree over the counter that I want to sell dollars to you some date in the future at a specific agreed price if you're willing to accept that from me, and you can then ask me to pay you a premium for accepting that risk. That's in essence what an over-the-counter derivative is. In other words, it's not something that is, the parameters is fixed and it is traded on a stock exchange or something. In other words, you get futures on orange juice, you get futures on all sorts of things exchanged at prices on exchanges.
Okay, so at the moment, if you and I enter into one of these agreements, there's no central regulation about it. We'll just sign a deal between the two of us. Now, the new regulation would set up a clearing system that they have to go through. I mean, I know very little about this area, but it would seem quite frustrating, I would imagine, if you and I are used to doing business and have done for a long time, and now we have to go through a central authority?
Okay, so the central regulatory body is not going to dictate the parameters that we agree on. In other words, nominal amount of our agreement, the date of exchange, etc. The settlement, as I said, every 6 months, every quarter, whatever, there will be a settlement of interest either due by me or due by you, currency to be given by you or to I give you. So there will be an exchange of things. Instead of us doing that directly and accepting credit risk between me and you, there will be an exchange in the middle where we will be settling our amounts through the exchange that is properly capitalized and regulated. So in other words, some of the credit risk is falling away between me and you. And if I now get in trouble, then there will be a regulatory body managing the situation, offsetting my exposures that I have with you, and only the net settlement will be there. In other words, there's a regulatory body that cautions that because of me defaulting on my payments, that it's got a ripple effect of your defaults to another person's because I couldn't honor my commitments. So that's really what the crux of this will be, is that the regulatory body will accept some of the risk of settlement and it will take it away from the individuals, but not on the terms of the agreement, of the over-the-counter derivative instrument as such.
Okay, so that would make trading safer for you and for me. Would it encourage more of this kind of trading then?
I would absolutely think that it would encourage more of that trading, because it would, as I said, take away some of that credit risk between counterparties, and the settlement would be in a safe and secure environment regulated by an authority. And that would open up the market, and more people would then be able to use these instruments.
Who would be the regulator? Do we have to set up a whole new body? Would it be under one of the existing institutions?
Okay, so at this point in time, there is derivative instruments, listed derivative instruments traded through the Johannesburg Stock Exchange, and there's nothing to say that they cannot also come in as the regulatory body that will facilitate this, but there will be a body that needs to be set up, be it an existing one or a new one, but there will be a body that needs to be set up. The terms and conditions, if I can term it that way, would need to be set up, and it would be regulated and capitalized as such.
And I presume, do other countries do it in this way too?
There is other countries looking at the same thing. I do not know of a specific country that's already got a regulatory body for over-the-counter derivatives.
Thank you very much indeed. Andres Saliers, very clear explanation. Really do appreciate it. The currency risk specialist and director at Treasury One. You with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking, turning intent into execution. That's how ABSA are invested in Africa's energy future. 7 minutes after 7. Good evening. Lots to come. Just went to go and say hello to Adrian Gore. He's in our waiting area outside. He and his book, The 4 Principles, Multiply Your Impact in Life and Leadership. They'll be on Your Money Show in about 10 minutes from now. Really looking forward to that conversation. I think going to be very interesting. Being able to have a brief look at the book, some very interesting insights, some brief histories, things that happened while he was in the process of forming and working with the Discovery Group, etc. An absolutely stellar group of people, by the way, have given him quotes. I'm talking, Trevor Noah, Larry Fink, the CEO at BlackRock, all sorts of very interesting people. There's a lot to look at. I think it's going to be a very, very interesting read. That big book launch, of course, on Wednesday with Mandy Wiener, the Midday Report's Mandy Wiener. Good to hear from you tonight on 011 8830702 and 021 446 0567. We'll talk to Adrian Gore, as I say. We will also speak to Isaac Odendaal. He's written a fascinating piece that looks at how Spain recovered from its problems. Some of its problems were very similar to ours. Now it was able to do it in about 15 years or so. And just sort of asking the question, are there any lessons in all of this for us? I think maybe they are. And then Mialani Kholeni, the Ntiso Consulting Group. He's the person we always talk to about municipalities, what's going on there. He'll talk to you about how I make my money, the business of consulting. We hear about consultants all the time, but the public sector in particular, I think a really, really interesting conversation. Looking forward to that from 7:30. Good to hear from you as well tonight on 072 702 1702. 8 minutes after 7.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
Well, a fascinating piece of analysis today from the economist at Old Mutual, Isaac Odendaal, in which he compares the situation Spain was in 15 years ago to the situation we're in now, mainly because of how it's been able to recover since then. Well, Isaac Odendaal, the investment strategist at Old Mutual Wealth, on the line for you now. Isaac, good evening. I remember looking at Spain 15 years ago. There was the global financial crisis. They had a real estate boom that crashed. Their youth unemployment was, I think, over 20% at one point. All in all, it looked like a very, very difficult situation. How did they go about recovering?
Yeah, good evening. It's, I suppose, a combination of luck, a combination of being in the right neighborhood, simply just the passage of time, but then also, tackling some tough reforms. And I suppose that's where the lesson is for South Africa, is that you can recover from a very, very deep depression. The unemployment rate, as you mentioned, north of 25%, which by European standards, of course, is outrageous. And youth unemployment was even higher. But yeah, in terms of the reforms, and these reforms were partially, we should add, kind of enforced on them through the broader European project, but things like deregulating the labor market. Obviously, they had to bail out the banking sector and recapitalize the banks, and there were some bank mergers that took place, perhaps not so relevant for our current situation. And then also just getting government finances under control, which got them to a point where they were able to be upgraded again by the credit ratings agencies. And maybe a final point is just the increasing outward focus of Spanish firms. So when the domestic economy collapsed, businesses obviously don't sit still. They need to go and find markets, so they start looking outside of Spain for markets, and so exports have performed quite well for them. And I think, again, in the South African context, that's often overlooked, is the we could be exporting a lot more, and that could be a big driver of job creation for us.
So, there's some elements of that in what's happening around us. There's reform happening in government. It seems that the National Treasury is getting on control of the finances. People are talking about ratings upgrades. We tend to talk about a committed group of people here. So you think of Operation Vulindlela, you think of the presidency. Was that what happened in Spain? Was there a sort of committed group of people, or were there other big factors?
Yeah, I think similar to South Africa, ultimately, you don't really change direction unless there's a crisis. You tend to muddle along if things aren't too bad. But obviously this crisis was severe. And so I think there was a broader acceptance from the public that they had to kind of endure some of these tough reforms, which would include things like, government spending, looking at the size and the scope of the welfare state and so on. And so that was sort of internal. And then externally, I suppose the benefit that they have that we don't have, some would argue it's not a benefit, it's a constraint, but is being part of the European Union. And so, there's sort of external pressure to reform in order to get access to funding and access to the support for the banking system. They've had to jump through a couple of hoops, and that ultimately helped him. And I suppose politically it also makes it a little bit easier to say that these reforms are not, we're not choosing this. This is being, they are the bad guys. The Europeans are the bad guys. The Germans are the bad guys. They're making us do this.
So, I mean, the neighborhood you're in matters, and our neighborhood faces exactly the same problems that we do. It's worse for them in some cases. I mean, that to me means it might actually be a bit of a harder job for us.
It is harder. We are by far the biggest and richest country in Southern Africa. And so, one consequence, and we've got the SADC summit going on at the moment, but the one consequence is we are attracting migrants from all over our region, and that has led to some political pushback and unhappiness. But Spain also, has had experience with big migration flows, including quite recently that incident in Ceuta, in their enclave in Northern Africa. But ultimately, I think the good news in South Africa is we did have that crisis moment. And I think the thing that catalyzed Vulindlela and similar reform processes was the realization that, things are pretty dire, especially when load shedding was kind of hitting stage 5, 6 consistently. I mean, that's a crisis mentality that you suddenly realize we cannot go on like this. And the pain of reform is actually less than the pain of the status quo. And I think that shift is ultimately what you need. And it's true for economics and politics as much as it is in your personal life. It has to be worse carrying on than actually, making the tough changes.
How important was politics to all of this? I mean, politics is a big factor for reform here. I mean, look at the big fight we have around Eskom. There are anti-reform voices. Spain had quite difficult politics, but clearly they were able to, push it through one way or another.
Yeah, so they had, in the early stages of this reform process, it was more of a conservative government, which I think had a kind of a natural tendency to want to shrink the state and deregulate and so on, and they had enough political support. I mean, but there were subsequently big swings in terms of, quite a bit of upheaval, new parties coming on the scene. Obviously, that process of austerity and economic pain kind of catalyzes new parties entering the scene. You'll remember there was an incident a few years ago where the Catalan regional government tried to have a succession a referendum. So the politics has been quite difficult. And then more recently, we've had more of a left-wing government, but they've been able to benefit from kind of the work that was done over the previous decade. But yeah, I think basically, you're not going to get through this without at least some consensus. It doesn't have to be perfect consensus, but there must be some consensus that change needs to happen. And for me, it's quite encouraging. I mean, there are voices against some of the reforms we mentioned, but broadly speaking, not that much. If you consider talking about, private concessions on Transnet's railways, for instance. I mean, a couple of years ago, that would have been unthinkable. That would have been privatization by stealth, and you would have had a big uproar. I think we've had relatively little of that, which tells me that there's a broad national consensus around the fact that we do need private investment into our network industries, and that is ultimately going to be a big driver of our growth story going forward. I mean, the one thing I didn't mention was that one of Spain's success stories is its massive renewable energy build out over the last decades. Obviously, it's a very sunny space, so they benefit from climate. But I mean, South Africa has even better solar and wind potential. But that's been a situation where it's protected them to a degree against the very big spikes in energy prices that the rest of Europe suffered from in 2022 after the Ukraine war, and now recently in the Iran war. So that is an example of where, investing in your energy system protects you against fossil fuel spikes, and it's actually become a growth industry for them. And even if you look at some of the projects we have in South Africa, you'll see Spanish companies involved. So it's not just a case of them actually producing a lot of energy. They've actually taken that know-how and that expertise, and they're able to export that internationally.
Isaac, thank you. Really interesting insights, really thoughtful. Isaac Odendaal is the investment strategist at Old Mutual Wealth. 17 minutes now after 7.
The Money Show.
Business Books.
Well, the launch on Wednesday of the book, The 4 Principles, Multiply Your Impact in Life and Leadership. The launch is at the Capitol on the Park. It involves our very own Mandy Wiener speaking to the author. And if you had to think to yourself, who in corporate SA could write a book like this, Multiply Your Impact in Life and Leadership? Well, who would be well placed to do it? I'll tell you, someone who's had a big impact on our business world and probably in one way or another, actually on you. And I'm talking, of course, about Adrian Gore, the founder and CEO at Discovery. And I'm pleased to tell you, he's actually agreed to come in and talk to us. Adrian, good evening. Thanks so much for taking the time. I really appreciate it.
Thanks for having me. Appreciate it.
Your book has 4 pillars, and I do want to go through some of them because I think there's a lot that's very interesting. But one of them, I actually had to go and look this up, the power of Pareto, 18-20, that 80% of results come from 20% of the inputs or causes. What's so important about this?
Well, the book is about how to kind of multiply impact. And one of the key principles is understanding how systems work, because the whole book is about kind of we miscoded and we kind of often make the wrong choices and decisions. The Pareto tail, the tail of that, the 80-20, the 20%, turns out that networks and systems are structured where a small number of things in the tail determine the system. And the breakthrough is the fact that our lives are a complex network. In other words, the decisions and actions you take, there are millions of them, that have no effect. But there are few in the tail that determine your impact. And therefore, understanding impact is about how you get into that tail, how you get there, how you stretch it out, and how you really make fundamental decisions that change your life. And when you make them, they're never the same. Your life is never the same again. It's a wonderful principle because it means that nothing is preset, predetermined. It's never too late. I woke up one day and started Discovery. That's a tail event. Nothing was the same thereafter. So it's kind of the 4th principle, but it's kind of an existential fact. Systems work called power laws, where the tail determines the average, and your life is a power law. So once you understand that, the issue is how do we get into that tail and how do we stretch it out?
Does it mean, so I mean, you could make every decision correctly, but if you marry the wrong person, you're going to suffer, right? Would be one way of looking at it. But if you look at how you run a business, you've got to get the big decisions right. You also have to have the right people. I mean, does this affect how you manage people as well?
Well, it affects everything. People are also power law. There are a small number of people that drive impact in the organization. The point is, no matter what you do, the tail forms. So the better the choice of people, the more motivated, the more you bring out the best in them, the more that tail is kind of longer and you get more impact. So everything is about understanding how you manage and get that into the tail. But it is about making those choices and decisions in the right way, but never too late. That's I think, the optimistic outcome of that.
Well, talking of optimism, you talk about disciplined optimism, and you say it's the most rational path. And I know plenty of pessimists who say pessimism is more rational. Economics is all about rational and, often the signs of misery. Why is optimism more rational than pessimism?
Because we were coded to avoid physical threats. That's how we evolved. Being eaten by a lion, etc. And if you go through our history, it's a history of short lifespan, violent deaths, right? But today, there aren't physical threats. The threats are systemic threats. Failure of government, governance, companies, education systems, healthcare systems, etc. So the issue here is that we are coded to seek the negative. That's what we do, right? And that's what we're interested in. It doesn't mean that you mustn't look for the negative. You can see the negatives anyway. The point about this idea of disciplined optimism is not about being happy or optimistic. It's about the disciplined ability to seek positive signals. When you do that, the negative you see anyway, I can tell you, like you, I can see what the threats are. The art is seeing the positive, and that's in fact what life is about today. Impact is about spotting opportunity. So we coded for negative. People say, why do newspapers and the radios, the media talk about the negative? People aren't interested in the positive. That's how we coded, right? That's why we're here. That's how we survived. But it turns out in today's world, we've got to seek positive signals as well. And having both on the table is realism. Being just pessimistic is primitive. That's how we coded. So the argument in the book, and there's a lot of research in it, is that realism and sophistication is the ability to do both. Seeing the negative is easy. That's my coding. I'll do it. But it's seeing the positive where the art is. And in fact, actually managing networks, a company, leading teams, requires seeding people with positive feedback cycles, seeing vision, etc. It's a fundamental issue for impact.
I mean, at the moment, everyone talks about AI. We had some Chabalala on the radio last week. He was incredibly optimistic about the potential for more people to get jobs as a result of AI. Everyone else is looking at it and, crying into their milk.
Well, I think you've got to be, again, realistic. And I think people do. They actually see the threat of it. That is how we think. But again, I think the art is, what are the opportunities in it? How do you see that? How do you get ready for that world of AI? AI, I think, will enhance the Pareto tail. There's kind of a longer tail, a greater network. It's a fascinating, exciting world. They're threats. They really are. You should see them. Nothing in the book is about not being realistic.
Sure.
It's about the sophistication of seeing the positive as well.
Focused urgency. You mentioned, and I looked at it briefly, I'm afraid, about, one or two threats that your group faced, sometimes from government action, for example, and you had to do things quickly. How important is that focused urgency? I mean, we often think that, there's a problem coming, we'll sort that out later, and isn't that always the mistake? You need to do it now.
Well, the book's hypothesis and, the research that and I've lived by this issue, is that time is much shorter than we think. We think every year counts the same. But when you're a year old, the perception of a year, 100% of your life. When you're 30, a year is 1/30th of your life. When you're 40, it's a 40th of your life. The years get faster as you get older. I've seen no one who disagrees with that fact. So when you actually do the mathematics, you find that, in fact, from age 25 to retirement is only 20% of your life. That's how you feel it. You've got 20% to make a difference. That's the impact zone, right? And so if you waste one day, one moment, procrastination, you're missing out. And that principle of understanding urgency and focusing it. The focus is about work-life balance, It's not 8 hours, 8 hours, 8 hours. It's what's important to you, Building a charity, an NGO, being a great parent, whatever that is in your context, you've got to be urgent.
How do you make other people feel that urgency? Because if you can't do that, you're not going to be able to lead a business or get much done. You need other people to feel the urgency too.
Well, I think first you have to inculcate in yourself a sense of urgency. I think it's critical. I think in leading a team, you've got to set deadlines, you've got to set tight goals. There are a lot of mechanisms that are used. External factors, a regulatory change, a war, a threat, creates that urgency. But in running a business, I think you have to create moments of urgency and pressure. Else things just kind of move on and you waste time. In a personal sense, you miss the opportunity for real impact.
And setting declared goals, you need to, make sure that decisions are made, that things are triggered. Can that be quite difficult? Because people might always think, this is just an internal thing or it's artificial, but you need a declared goal of some kind.
The book is based all on science and mathematics and the research that we did. A key issue, and it's Nobel Prize winning work by Daniel Kahneman, is the idea of loss aversion, that we are more motivated by potential loss than gain, twice as much. It's the same as kind of a concern it's the same as the negative concern, that concern of loss, right? When you set a goal and it's declared, it's kind of, in a sense, public, whatever that means. You trigger loss aversion. You've got something to lose. And that changes how you're motivated and driven. I see people at school, in matric, going to university, in sport, all set goals. But in the workplace, in the general life, in that 20% of time to make an impact, people don't set goals. And you're kind of living your life on potential gain. Something may happen. It doesn't work. You've got to set out something to lose. That invisible hand of loss aversion drives change, drives motivation. It's amazing how hard people can work to get to a goal. If a goal is noble, people are close to death trying to get to that goal. It's a critical thing. You can always work harder.
Well, talking of that, you run a group, okay? There's a lot going on in that space. Simple question. How on earth did you find the time to put it all together?
The idea of my team and I was, listen, we've been doing research on this for 30 years, right? We thought we'd put it together in a few months. This has been 2 years of considerable amount of work, but it's been a wonderful journey. It's brought out a huge amount of our own values and purpose and how discovery has been built, which has been it's really the story of discovery in many ways, the anecdotes, whatever, but a wonderful experience, but a lot of work.
Did the process of writing it, looking back on some of what happened, some of what you did, has it changed the way you understand some of what you did and some of the decisions and choices and the things you were facing in any way? It gives you a chance to look back on things that happened 20 years ago. It might make you think about them in a different way, maybe?
I don't know. I mean, I think truthfully, the principles and seeing it in a very disciplined light has kind of almost accentuated. I now know what works, what doesn't work. And that's why the book had such clarity. You know, we reworked a lot of the stuff that we did. And it's quite amazing that miscoding and rethinking things led to things that I think have worked for us. But the journey we've been on has been quite remarkable. But it's kind of contained in a number of core things that are fundamental, you know, and that's what the book is about.
This is sometimes an unfair question. I've noticed when I ask authors this question, they battle with it a little bit, which is, you know, the question is a simple, why did you write the book? Now, you're someone with immense experience in leadership, and I think a lot of people will look to you for lessons. Was that part of the motivation? Was there maybe part of the story you wanted to tell?
Well, I'm pleased you called me an author.
Well, there are other things.
Listen, I think, you know, for 3 decades we've been trying to answer this question. Why do some people make impact that others don't? Right? And trying to motivate and bring out the best.
Question.
It's the key issue of leadership, I think, especially business where you're relying on. I've had the privilege of working with the most remarkable team. The idea of the book was, could we share these principles? And the principles are teachable. They're demonstrable. There's mathematics in the book about the multiplier effect. So the purpose of the book was kind of, could we make an impact elsewhere? And I'm amazed in the last few weeks as we've launched it in the UK and here, the amount of narrative and discussion and debate, you know. Something I've been always on the hook for is you're this kind of naive optimist, you know. It's giving me the chance now to say, this is not about naivety. It's about kind of a sophisticated tactic of seeking the positive. So the book is about social impact, you know, and I think these things are teachable and they're shareable. That's the idea.
Is there, when you talk about optimism, and I have to say from the conversation we've been having, that's what I'm going to be thinking about on my way home, because I think you're right. We see the negative, and I work in journalism, so I'm a kind of cynical optimist, I think. But it can be quite hard to remain optimistic. Now, you've been able to build a business in a difficult area. Medical, what you did, medical aids can be a tough area. During some of those times that were tough. I mean, your optimism must get challenged. How do you encourage people to remain that disciplined optimist?
The ask is that you seek positive in every situation. The negatives alone. So any situation I'm in, if I'm thinking at my best, is I understand the negatives, and I do. That's I'm an actuary about training. Risk management is what we do. So I understand the negatives. Issues to put up positives on the table. It's not about the naivety of being happy or optimistic. People aren't. People are depressed, they're down. That's not the issue. The issue is in every situation, how do you find, you know, kind of the optimism? It's amazing. I sit in many boards. Boards look at a risk register. I've never seen items on the risk register that most of the board are shocked by. I know it. Yeah. But they don't know the positive, the vision, you know. You've got to do both. So this is not about, as you're putting it, being optimistic. You can't be all the time. That's a different issue. This is about the ability to seek opportunity. And that's what I think success and impact is about.
Adrian Gore is the author of The 4 Principles, Multiply Your Impact in Life and Leadership. He does have a day job. He's the CEO at Discovery. Adrian, really appreciate you coming in. Thank you. It's just gone 7:30.
The Money Show. How I make my money.
23 minutes to 8 the time. I'm sure from time to time you'll hear someone on the radio and we'll be speaking to them and there'll be an expert on this and that. And you'll think to yourself, how on earth does that business model work? Well, I'm pleased to tell you that Mealani Kholeni, someone who we talk to about local government much of the time and who, for various reasons, I think might be busy over the next few months, has agreed to come and tell you how his business works. He's the Group Chief Advisor at Interyiso Consulting, the Interyiso Consulting Group. And I'm pleased to tell you he's taken the trouble to come into our studio and he's with me now. Mealani, good evening. Thanks so much for talking to us tonight.
Well, good evening, Stephen, and good evening to the listeners.
So you're a consultant largely about local government. That's how we know you. Your group consults largely to government. So I have to start with, who are your clients? Is it councils? I mean, I saw the Southern African, was it DBSA? There are various people who are your clients. Who are they?
So we focus predominantly, as you put it, public sector, as you put it. So if you think the length and breadth of what public sector covers, from national departments, provincial, locals, state-owned entities, municipal-owned entities. So everyone who is an organ of state, and for particular reasons, because, government for us is the enabler for most of the things that we want to do within the economy. So we focus on, and in fact, our mission is we empower institutions that enable Africa's development. And in this case, South Africa's development. But our mission is far much greater because you want government to work. And when government works, everything else starts to fall in place. So anyone who has a mandate, for instance, with revenue, anyone who has a mandate in terms of managing the economy or managing whatever has to do with the public, as well as looking at how we industrialize the country. So that's the other aspect of what we do. So everyone in government, but we also touch the private sector as well, because the knowledge that we've amassed, in the public sector is very useful to the private sector when they want to do big things.
It must be, because it's quite broad. I mean, the public sector is very broad. You're going from, the financing of wind turbines to managing water systems in a council to managing revenue. How do you go about building up that expertise, to having the right people to do it, to give, to make sure that they can provide the right solutions?
I think it's years, that, we've been in the field. I myself, if I may give you a very short background, apart, from having worked, in the likes of, Standard Bank, I worked for Ekurhuleni Metro, and my first job there in the public sector was to run the revenue management and enhancement program, which was somewhat of a buzzword, in the early 2000s or mid 2000s. And from there on, we built expertise that, from there I've written methodologies that, I can get someone who walks in through the door, and within 6 months, they will navigate, the public sector and particularly municipalities to understand exactly what makes them tick, how to diagnose the problems that they face, as well as to put the solutions, forward. So the knowledge that we have over the years, we've reduced it into methodologies, and we look at, completeness of revenue or completeness of things, if I may put it, quite generally. And we look at, leakages, in terms of, the systems. We look at, how then we increase the coverage of the services or the revenue or the service delivery and all of those different things. So the knowledge that we have, we've institutionalized it. And it's something that, you can look at the MFMA, you can look at the Municipal Systems Act, you can virtually look at a lot of different things in government. So what we've managed to do is to distill that knowledge into something that becomes of a pointed and a very specific engagement that would have with various clients within there. So we train up our consultants, quite rigorously, and some of them come with some form of experience. Some were ex-CFOs within local government. Some are coming new from, as interns. Some of them, have come through. And if I look to my left, I may have someone who has come through as a junior, but today is running something very, very serious within the business.
Do you see the same issues in the state coming up again and again? And automatically, people are going to look at, where does all the money go? Do you see the same problems coming up again and again?
Well, what we've seen over the years is we've seen typically what we've now distilled into about 12 problems within government. And those things, unfortunately, tend to repeat themselves in various forms, at times in a combination or sometimes singularly. And those things cover revenue, which is cash flow, which is a major issue within a local government. And please note that, even provincial and national have to also manage the budgets that they are given. State-owned entities, your Transnets, and so on and so forth. If they don't have a good balance sheet, there's nothing they can do out in the market to implement, the infrastructure projects. So we see those projects. We see issues of service delivery. We see issues of processing. We see issues of policy. We see issues of management and governance. So it's a variety of issues that we tend to see. And when institutions tend to work very well, and you can give an example of an ESCOM, you hope that it works well and never breaks, as it goes, forward. But, every now and then there are cycles that, organizations go through, especially when you find a change in leadership, In our case, the elections that we are facing on the November 4th, in some of the places, it will be as if they are starting from scratch. So you tend to see similar flavors of, issues, which shows that the institutionalization of what those organizations or departments are doing has not quite, stuck to what they should be doing.
Your company also consults for utilities. You help with utilities. And I always think, okay, so there's a council and I can understand the problems, but a utility like City Power, which, I mean, I'm sorry to say this, looks to me as an outsider like a mess. You had the CEO going, you had the SIU investigating, you had all sorts of things going on. What's it like to get under the skin of these things? They're big, they're complex, they employ thousands of people, they have huge infrastructure. I mean, it must take a while to understand how any one of them can work.
I think that it's a fantastic challenge, and dare I say, or need I not say, that they are one of our clients. And once we got into City Power, yes, it's a big organization. So just to contextualize, a City Power, and there are many other of the institutions that we cover. It is the second largest electricity utility in the country after Eskom. So if you look at the size of, what they have to do, of course, there are electricity departments in the other metros and so on, but City Power is quite large. But we got in and we looked at, all of the different moving parts. And I think, within a 6, to 8 weeks, period, we were able to understand the things that were not working well, and very simple things, So when you look at an organization, for us is we look at the complexity, but we also look at the simple things that are going to make the most difference. So a simple thing of you logging a fault, online. And that fault, does it go into a single system or is it into multiple systems? Is the technician at the end of the line who picks it up? Do they have digitized, clipboard and so on? So we tend to look at, a system, as opposed to just looking at an organization in an isolated manner. So we deal with value chains. So when we get into City Power, what's this value chain of City Power? We get into even an economic development department. What is the value chain of what needs to be done? And that's how we approach our problem solving and how we get to solve, the components that make the most difference. And from there, you start solving for the other things that, add, to the system. Working properly. So for us, the approach is value chains, understanding of those value chains, and looking at the organization as a system and never in isolation, because you'll solve the wrong things and perpetuate, and cause unintended consequences.
You must at times look at situations and you know what the right thing to do is, and you tell the person in charge, this is the right thing to do. And they go, we're not going to do that. And this would happen in private companies too, by the way. How do you deal with that?
So
feel free to give examples.
So, and that's a very good one. One thing that, we have as our motto, we have 3 words that, we, say as our mantra. So we say, number 1 is truth.
Yeah. It's the name of your company.
We owe it. It's the name of our company. We owe it to whoever we deal with, to tell them the truth. When we've told them the truth, that's how we build trust with them. Because if they understand the truth in the same way that truth is making things not to work, they start to at least be persuaded. It may not be a big bang approach, or it may not be a yes on day one, so that, the last one we can deliver results. And I'll tell you with, one of the clients, like the city of Tshwane, we've been working with them for a while. We've been through the transitions, starting with the ANC-led government. We went to the DA-led government. We went to an administration which was instituted by province, and back, to DA, and now to the led by Action SA party. So the issues, as you go along the transitions, is what is the truth about, what the institution must know at all times. Number 1 is, if revenue is not collected, you're not going to pay salaries. So whoever, for instance, we need to convince, whether it's the city manager, whether it's the executive mayor, whether it's the chief financial officer, the truths that I think, we bring home to all of them is, think of an organization. If you want it to work, I mean, for you sitting behind the microphone, if there's no power, you're not going to work. So we all obviously bring it home in those cases. But we've also had very difficult, circumstances where we had to spend sleepless nights convincing, some of, the clients. And those maybe I will not talk about. But today they are functioning fantastically and they are making a difference and they are delivering services. But the issue about it is that we persist with what, needs to be done. We tell the story, whether through the data that, and we use the same data that they look at every day, and we find the nuggets, we find the problems, and we position it differently, and so on. So yes, there are clients, who want to pull back, but once they at least are convinced to do a phase one or even a prototype, which is the other way that, we then convince clients to test out what we're talking about, then it makes a difference. And they want more, if once they've done, phase one. And I'm afraid, some who have not listened to us, are nowhere to be, found or seen today. They are experiencing problems and, but we can't say we told you so, but we're happy to go back and work with them so that we change, the difficulties that they are facing. So, and clients differ and people come and go. And one of the great things that, we have is, as we go through the transactions, we always have a story for the new person that comes into office. We don't wait for day 100, we go day one so that we tell the story and they start to understand the institution in the way that they must be able to move within the various issues.
We're speaking to Mealani Kholeni, the Group Chief Advisor at the Intiyiso Consulting Group. We're talking to him about how he makes his money tonight on The Money Show. It's 10 minutes late.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, turning intent into execution. That's how Absa are invested in Africa's energy future.
The Money Show, how I make my money.
8 minutes to 8 the time. We're speaking to Mealani Kholeni. He is the Group Chief Advisor at the Intiyiso Consulting Group about how they make their money, consulting largely to the state. This is going to be a strange question. Do private companies ever contact you, not because they want your services directly, but because they want to do business or they have some interaction with the council? Maybe they're building a big complex and they want to know not how to manage the council. They want you to facilitate it. They want to know how to comply with the council. Does that happen?
Definitely it happens. And I think it starts, at a point where they're also looking at their strategy to see that, they are aligned with what the council or the legislation and so on. So we've looked at, various, companies. We've worked with the likes of Bidvest. We've worked with the likes of Coca-Cola. We've worked with, various entities that, are there in the private sector. But most of them as well look at stakeholder management. So recently, we may not mention the name, but we recently had a call as well to look at, how do we get to understand who is who in this jungle called local government or in the provinces. And some are just coming new into the country, looking at, where they can set up and they are looking for opportunities, which is part of our industrialization subsidiary, which looks at, master planning, look at fundraising and different areas. So yes, we do work with the private sector and most welcome to knock on our door.
There's been quite a lot of debate about consultants over the years. And 50 years ago, you wouldn't have a government or council really using a consultant. It would all be in-house, right? Sometimes wonderfully, sometimes disastrously. From around the 90s, we've seen the sector grow. Government uses consultants. Occasionally it becomes controversial. Then it goes away again. Do you think that this sector is going to continue growing, that government is always going to use consultants in the way it does now? I mean, you require a lot of expertise to run a government now, and you can't employ those people all the time.
Absolutely. And I think the simple way to look at it is we talk about data analysts, we talk about data scientists, we're talking about AI now, and a whole lot of things that are happening within government. There is no way that, the people who are sitting in government, overnight will be able to catch on in terms of those particular skills. So companies like ours live, breathe, eat, sleep, wake up, and trying new things and trying new technologies. But let me also put a point. Our CEO, Alex Mabunda, wrote quite a very strong article around how the first world have used consultants as a machinery to change the way that their development. So we're saying to government as well, despite, at times, whether it's at the AG or in parliament and different places who look down perhaps, on the use of consultants. So our message is that if you use consultants for the right things, you can gain a competitive advantage, you can grow, and you can even get to the areas where you do not have capability, where you can build capability very quickly. So government in its current form need to look at, how they work with, consulting entities so that they start to leapfrog the positions that they are in. Government has huge opportunities around digitizing and digitalization of their services. So you can just imagine a government which is online 24 hours makes a huge difference to someone who has to get into a taxi and jump off it and catch another taxi just to go and meet a government official or get into a municipality to ask, a question or to make an arrangement. But if that can be done online, that will make a huge difference. So I think for us, we see the sector growing. We see a number of people growing. When we started, we were one of the few companies or the only company doing revenue management. But now you have everyone else who's walks around doing revenue management. So there are opportunities definitely for government to use consulting services to leapfrog.
You're a South African firm. A couple of your international colleagues have behaved very badly, disgracefully. Bain, McKinsey. Do you think that hurt the name of consultants?
In a way, I think, the international companies have been hurt.
Yeah.
But what it has done for
big
us,
time, yeah.
what it has done for us is everyone starts looking around and saying, but where is an authentically African entity that we can work with? And, true to form, there are others, but, I'll punt, our name because, we here, we understand, the local economy, we understand the various, dynamics, the cultures, and so on. So I think the issue then is, yes, go with international entities, but remember that, the local dynamics matter more than just, the deck of slides that you're going to produce at the end of the day. The other difference with us is that when we've produced, whatever report or a deck of slides, we don't run away. We want to implement those with you. So we're not just collecting the check for putting great English, onto slides and putting infographics and so on. We sit in there and we work through that strategy because we believe in what the solution is and that it will work.
We got 2 minutes left, and I have to ask because I'll be in real trouble if I don't. After the local elections, do you think governance in places like Joburg, Tshwane, Ekurhuleni, do you think it's going to improve? Everyone's focusing on Joburg, obviously, because you know why they're focusing on Joburg. But do you think that governance will improve?
We are very hopeful that governance will improve. We've seen governance improve in places where we never thought they would. Of course, for some coalitions, may have been they may have been blindsided by coalitions. But in some of the councils or municipalities, it has worked to their advantage. Some have resisted, but after this November 4 elections, we believe that, most organizations who are really serious about what they want to do will look around and say, if I have this particular candidate wanting to be the executive mayor, I better pull up my game. I better make sure that, my game, I bring my A game into this. So I think we likely and most likely to see most of the places bringing the A game. There's talk about, headhunting of candidates who are going to lead various municipalities. And when that starts to happen, it means that the game is changing forever. And you're bringing experience that will come in and hit the ground running from day one. So we're quite hopeful that there will be changes. Of course, there will be places that they will fall behind. And those places are the ones that perpetually and constantly need attention, and typically they don't have any economic base around them. So those are the ones that may be left behind.
Mealani Kholeni, thank you so much for coming in. The Group Chief Advisor at the Intiyiso Consulting Group.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, turning intent into execution. That's how Absa are invested in Africa's energy future.
Well, in the US tonight, we see that things are turning negative, I'm afraid. The Dow Jones is down 0.55. The Nasdaq is down 0.28. The S&P 500 is down 0.41 at the moment. Oil prices not going in the right way, I'm afraid. We'll be back tomorrow. The conversation with Mealani Kholeni, the conversation with Adrian Gore, also will be available for you as a podcast very shortly. See you tomorrow. Good evening. It's 8 o'clock.